Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Monday, October 20th. The euro spent the overnight session struggling to break and hold above the 1.3500 area. The pair managed to do so for a while but soon retraced to the LFB R1 at 1.3490. During the last few days of trading, the pair was unable to break out of that trading range, but it did so in New York after Bernanke told House members that a second stimulus package was appropriate. Volume in the pair has been gradually decreasing. The German PPI was released at 0.3% for the month of September, deviating from the market's expectations of negative 0.5%. The year-over-year read still stands at 8.3%, the highest rate of inflation seen in the last decade. The largest upward pressure came from energy products in the prior months, but now this trend seems to be reversing. The euro can be seen here in a descending triangle formation. The pair keeps getting wound up more and more. Eventually it will pop one way or the other. However, this formation tends to break to the horizontal line situated at 1.3250. The pound broke above the 1.7400 level during the European trading hours, something that the pair has been unable to do in the last few trading days. Even though the pound moved 170 pips, the trading volume has been very low so far. The pound declined sharply in New York after Bernanke spoke and after the White House said it was open to the idea of a second stimulus package. In September, the UK M4 rose by £26 billion, or 1.4%, much more than what analysts had predicted. Year over year, the M4 growth rate is standing at 12.2%. The long-run average of the M4 annual growth rate is approximately 13%. However, earlier this year the rate dipped to 10%. M4 lending rose by £35.5 billion in September, seasonally adjusted. The pound once again bounced off the descending trend line as well as bouncing off of support at 1.7130. The RSI is still not confirmed a direction and volume tapered off today. Should a break come, it will need to be on higher volume. The Aussie advanced 120 pips since the Sunday Open but hit a resistance area during the European session, trading just above the LFB R1 at 0.7025, slightly above Friday's high. A breakthrough may not be so easy to achieve. Despite gold prices and equity markets moving higher and Australian producer prices moving higher, volume in the pair has been on the light side since the new trading week began. Unlike the euro and pound, the Australian dollar strengthened during the New York session as traders bought equities. The Aussie has not made up its mind whether it wants to go long or short. However, this week has a few Australian news releases such as PPI, CPI, and monetary policy meeting minutes that could give the pair some direction. Main resistance can be found at 0.7150 and 0.7350, while support has been found at 0.6500 and below that 0.6330. The CAD has again made strong moves during the overnight session, eclipsing some of the pairs that traditionally move during the overnight hours. The CAD fell as low as the LFB S1 at 1.1745, tumbling 80 pips overnight as oil, the commodity that backs the CAD's valuation, continued to post gains, adding strength to the Canadian dollar. The pair rose from there even as oil continued to increase in price and looked to finish the day near session highs. In economic news, Statistics Canada said wholesale sales for August declined for the first time in 5 months, led by a significant decline in the automotive sector, which declined by 1.5% to $45.7 billion. In real terms, sales declined 3.3%. Also, foreign investment in Canadian securities slowed to $730 million Canadian dollars in August. The loonie is ready to pop. It has hit the ascending trend line several times, and it has hit resistance at 1.2000 several times. Yes, it is ready to go. The only concern would be the fact that volume has been lower than usual. The Swissy continued to trade within a tight range during the overnight sessions, moving along the neutral pivot point at 1.1350. The pair has struggled since last week to break in either direction decisively and continues to have trouble breaking and holding above 1.1500 or below 1.1300. Once in New York, the pair rose to the highest level since the end of last year. The Swissy has broken out of its ascending triangle during today's trading. Unfortunately, the volume needed to hold such a move was not there, as it has decreased by approximately 60% for the day. Should we see more participation tomorrow, the pair may test 1.1500 again. The yen has gained 50 pips since the new week started to just below the LFB R1 at 102.10. The pair has strengthened over the last few days, reflecting the gains in the equity markets and at the same time reflecting the market's approach to risk. The two major yen crosses, euro yen and pound yen, also headed up during the overnight session, and global equity markets seem ready to move higher. The pair remained flat in New York even as equities rose and the dollar strengthened against every currency except the Australian dollar. The yen can be seen bumbling along here. The pair has shown no real direction since the market opened yesterday. The pair is working itself into an ascending triangle with resistance at 103. This is another pair that has seen lower than average volume. Should the pair try to break out tomorrow, it will need to come on a substantial increase in volume. In Asian equities, the Nikkei gained 311 points or 3.59% to close at 9,005. The Australian S&P ASX advanced 171 points or 4.32% to close at 4142. In European stocks, the German DAX gained 53 points or 1.12% to close at 4835, and the UK FTSE rose 219 points or 5.41% to close at 4282. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 9265 after gaining 413 points or 4.67%. The S&P closed at 985, up 44 points or 4.77%, while the Nasdaq finished trading at 1770 with a gain of 58 points or 3.43%. Crude oil for November delivery was up 6.5% to close at $74 per barrel, and gold for December delivery was recently trading up 1% to $788 per ounce. In Treasuries, the 2-year notes yield gained 8.9 basis points to 1.704%. While the yield on the 10-year note fell 8.4 basis points to 3.847%. Overall, Bernanke's support of a second stimulus package found favor with equity markets and dollar bulls. Also boosting stocks was news that market research firm NPD showed Mac unit sales were up 19% compared to September of last year and up 23% compared to August of last year. In economic news, the Conference Board's leading indicator showed a surprising gain for October. The index was boosted by 0.3% after an increase in the money supply. It was the first increase seen in the last 5 months. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.